you think it would have to get to? Could you see if it, let's say, CPI remains quite stable over the coming months, could you see them cutting then, or do you think it would have to be a bit of a drop?
No, I think it has to go lower. I think that the Fed has to start thinking about this idea. See, they start from a premise that the neutral funds rate is 2.5%. How do they arrive at that? Well, they think that the long run inflation rate is 2. And then they think that the neutral funds rate should be somewhere at around 0.5% above that. Well, if the long run inflation rate is 3, then we're already talking about, a 4.5% funds rate, 4.5% funds rate, or I'm sorry, 3.5% funds rate in order to get neutral. But then that 50 basis points, if it's 3, that's probably closer to 100. So in other words, what I'm trying to argue, and this has been an argument in economic circles, is 2.5 is not neutral. It might be near something like 4%. Now the Fed at 5 to 5.25 might be tight, but not nearly as tight as they thought, which is why the economy seems to be able to handle this level of interest rates. It's shrugging those rates off. Add to that the yield curve is still inverted and has been for nearly 2 years now. So if the funds rate is neutral at around 4 and 5.25 to 5.5 is a restrictive funds rate, market rates aren't that restrictive because they're near 4%. We're at around 4.15 as we're recording on the 10-year note. So we're not that far away from it. And that's one of the biggest, I think, debates within the economic community and at the Fed. How much are we really hurting the economy with these interest rates? And my answer is not at all. And I think more and more people are coming to not at all. We're hurting the economy. Okay, but we have an inflation, an unemployment rate under 4%. We have GDP growing at trend. We've got new all-time highs in the stock market and sticky inflation at 3. Well, if these rates aren't hurting, why do we need to cut them? And I think that that's the narrative that we're going to hear more and more, that there's not going to be a rate cut. So put me in the camp that the rate cut might be at the end of the year, only if the data starts to weaken by then. Now, it hasn't been for the last several months, and I don't think it will, but, let's see what happens, through the summer and whether or not the data does weaken.